So, welcome guys to day 2 of our Forex Bootcamp, and I will be taking us through a number of things. Let me just share my screen. Just give me 1 minute to do that. Is my screen visible? Kindly let's confirm that. Can you see my screen, guys? Is anyone trying to say something? Okay. Should I progress? I just need someone, Angela, Kate, anyone? Is my screen visible?
Yes, it is.
All right, thank you so much. So yeah, Issachar Fortunes is hosting us again for the second day. So today, Ignatius was the first person to join. He's joining us all the way from Ghana. So Ignatius, kindly text me on Telegram, in my DM. I have been buying airtime for the first person, so I think I can send you $1 or two.
I have a
Um,
complaint.
okay,
I have a complaint.
okay.
I was trying the other link to join.
Sorry. Communications are made
Okay,
in the
it's okay.
Telegram group. So for tomorrow, try and be the first one to do that. So for today,
It's okay.
Ignatius, Ian had airtime yesterday, so Ignatius is not from here, so I can't send him airtime. If Ignatius, we will see how I can send you $1 or two via Binance or some other wallet. So yes, tomorrow try and come early. I know it's not much, but you can buy yourself a bottle of water or airtime for tomorrow's class. So Issachar Fortunes will be hosting us. I'm so sorry for the cough and for the cold. So I will just be diving through. I'll be diving through directly through what we have in store for today. So just a highlight. I have a YouTube channel that just has 2 subscribers. So kindly, after the call or during the call, make time. I have uploaded the videos for yesterday classes both, but I've just shared the first video on the group, but I'll share the other one after the class, and also today's class are being recorded. So kindly do that. I will pray for us, then we will begin. So let's pray. Everlasting Father, we're grateful for this time and this day. We pray for wisdom and enablement, speed, and ability from above to grasp everything that we're going to go through today. Give us a lovely time together, and may this not be time wasted. Thank you for the sacrifice and for the commitment of the ones who have attended. May you bless them. Thank you that the finances are prospering. In Jesus' name we've prayed. Amen. So yeah, I'm a Christian and I love Jesus. So I will begin with what I have in store for us today. So allow me to just type the the things we'll try and go through for today's class. If you will allow me just to type it here. Uh, so class topics. In case you don't hear me, you can either chat me on Telegram. Yeah, chat me on Telegram. If I'm not audible, just chat me on Telegram. So today's class will be a bit more interactive, and I hope we will manage to do this together. So we're going to it's still introductory, but now we are going a bit deeper. Yesterday we covered introduction to Forex and in the introduction to structure. For those who are able to join, those who are not able, kindly watch the videos on YouTube on our channel, and we will be able to. So for today, we will do introduction. huh. Introduction to smart money. So I am a smart money trader. It's one of the many trading techniques that are used by traders on their trading journey and career. So I will explain what all that is about. Then the second thing we'll do is we will cover liquidity. We will get to know what liquidity is. Don't mind the big words. We will understand by the end of this. Then the third thing we'll do is institutional candles and mitigation theory. So we will take these two together, and then finally we will now focus on, let me just check the last one. I have notes. Uh, we'll now focus on, this will be now institutional candles, the types and all that. So I know it's kind of a repetition, but you'll get to know why I have separated the fourth one. So let me just change this color to, which color? Which color is better? I think purple will do. Okay, guys, so those are the topics for today's class, and we will just begin. So I have tried today to be a bit more organized. We have the tabs that we will use open and running. So you can clap for me. So when we just go to Wikipedia and search Forex, Forex is a foreign exchange. We went through all this yesterday, but today we'll be focusing on smart money. So who is smart money? So there are people in this market that actually move price and affect if the price is going to move up, which as we said yesterday was buying, or it's going to move down, which is a sell. So there are key market participants who are called smart money, and what they do is they have the ability, and because of the amount of the amount of the amount of the money they have, then they are able to have price move to their favor. If smart money decides that they are buying, then it's either you buy or you'll have losses. So if you can't you can't beat them, join them. Yes. So these are the top currency traders in the world as of June 2022, and this is their market share. So yesterday, for those who can remember, we say that the forex market has around 7 trillion US dollars. So the first one is JP Morgan. Then the second one is UBS. The third one is, most of them are banks and some are trading companies, and the majority are in the US. But yes, so for example, you find that JP Morgan controls 10% of this 7 trillion shillings, dollars. So depending with your currency and the exchange rate in Ghana or in Kenya or where you're joining the call from, just do the math and it's a lot of money. So, and even the least, Bank of America, um, controls 4.5%. That's not small money. That's not a little amount of money. So yes, that is smart money. Then something else we need to notice is forex is not gambling. Forex is a market, and in a market we have buyers and we have sellers. So when I am buying, for example, Euro USD, there is someone who is selling Euro USD at the same time. And now this is where it starts getting serious. So let me use this. So there's something called lot size. It's how fast it's okay. What lot size does, it determines how fast you are either profitable or how fast you make losses. So if you use a big lot size, then you will find that if the trade goes in your favor, assuming, let me just use this, you're using a big lot size, and you're trying to buy price to the upside. You believe that according to your sentiment, price is going to buy to the upside. So if your lot size is big, then this candle uh will I'll go and explain. So let me just write that down. So the smallest lots when we're trading forex, let me try and use this 0.0, no, that's bad. 0.1. uh my handwriting was not good when I was in high school, and it's not changing. Let me just try and type this. Okay, so the least lot size when you're trading currencies is 0.01 lots. So every time we are buying, so assuming I am buying Euro USD, okay? So the currency we are buying is the Euro versus the US dollar, all right? So if I am buying uh this currency, there needs to be someone, it's a market as we've said, so there needs to be someone on the other side who is willing to sell at the same amount, 0.01 lots, okay? So this is the list, but for this specific one, derive, the synthetic indices have lower. For example, the volatility 75 has 0 point, has three zeros, then has a one or something, has more numbers to it. So but for the conventional forex market, this is the least amount. So now is what happens is, this is where now it begins to get serious. When you're making profit, that means somebody is making a loss. And when you're making a loss, that means somebody is making a profit. So this is now where now the rubber starts meeting the road. Um, and as we have said, uh, so if you're selling this value, this one, you need to have somebody who is selling an equal amount. So let's take this a bit another level. So if I am selling 0.01, no, if I am buying now 0.10, okay, buy, how many lots, you can unmute and probably assist me in this, how many lots of point zero point point zero one will I need to for this order to be filled by the broker, for example, um, to see if we are getting something. How many orders of this will I need to fill this buy order?
0.9. Okay, I'm guessing.
How many people do we need to with this amount to fill this one?
So no,
Nine.
I'm lost.
You said
9.
you need,
I'm lost.
okay,
9.
um okay, it's 10, because now this value should be equals to this one.
Oh, yeah.
Yes,
Oh, I
so
actually know now.
okay,
Okay.
and let's try another one. If I'm doing the same amount, okay, let me just put a 0.01, 0.10, and it's still a buy. How many orders of 0.02 will I need for me to be filled in?
8.
Five.
Okay, yeah, 5.
8. Oh, it's 5.
Yes, it's okay. Mathematics. But that is just the idea. It's a market. So every time you're selling, know that there's someone on the other side who is buying. And now for because of the amount of money that smart money has, as we have seen, their account has a lot of money. So they can open orders of up to their lots. Oh, okay. I lost that. I actually lost that. Anyway, um, so they can open a lot size of up to that, okay, or a million. The lot size can stretch all the way to that, okay. So let me ask, how many orders of our small orders will we need to fill this? Hi guys. We will need, when let's say JP Morgan is buying, they will need this times 100. We were just multiplying what, I don't know how to put this, but they will need a lot of money for the market to move, and for price to move. We need money, they need money, okay. So what they do is they capture money from retail traders for them to be able to sell. So that was why I began by saying, if we cannot join them, if we cannot beat them, then we join them. So I know it's a bit murky, and we will get clarity as we continue. So this is just um, an example of how strong smart money is. So yeah, that's just about smart money. So if you trade smart money with proper risk management, you will definitely be profitable. So a balance of the two. And something else, I know there might be indicator traders, so I will be showing us how to trade. You see, my charts are just empty. You can wonder how I am able to know that price will probably turn from this point. So I will be showing that even as we continue with this bootcamp. So that's the first thing, introduction to smart money. So you can just probably Google and try and find a bit more. This is just a bootcamp, and it's an introduction to help us get on our feet and get started. Then something else that I can say, let us look for this. For those who are new, completely new to Forex, there is an academy. It's called Baby Pips. It's like baby steps. So when you're new to Forex, you can just check out. They have a lot of good content, and it's free. They have tests. It will help you to have a broader perspective of what this one over here, babypips.com. You can just check it out, learn crypto. They have tutorials, they have a few things for you to know the basics, and all these terminologies that I'm using, they have the definitions and all that. So we will just progress with liquidity. So anyone who knows what liquidity might be? Anyone? There's going to be prize for the one who is participating most. Hopefully, I don't know. Okay. Anyone who knows what liquidity is on the call? Um, Anyone who knows what it is on the call?
It's money.
Thanks. Uh, what else? Anyone
Uh,
else?
maybe
Liquidity is money.
Okay, thank you. Liquidity is money.
uh, liquidity is the cash flow in the market.
Okay.
Can you get me, please?
Yes, it's clear. I can hear you. So let me write this down.
Okay, I've said
Yes.
liquidity is the cash flow in the
Liquidity
market.
I
equals money equals cash flow. When somebody says, "Are you liquid?" You know, do you have money? Do you have cash? Um, yeah, you can have assets that are liquid and others that are not. I mean, can you, liquidity is how
can
easily
no.
can I convert this to cash? Okay, so money. Something else that liquidity is
Yes.
for those who have a bit
Yes.
of knowledge. There's something called stop loss. Stop loss, this is where you determine the maximum amount of money you're going to lose, but we will get to know that as we continue. So yeah, so liquidity is money, liquidity is cash flow, liquidity is stop loss. So if I were to ask you, we've said that we need money. Even if you go to buy something in the normal market, where we buy grains and cereals and all that, and groceries, we need money, right? So if I were to ask you, do we need money for the price to move? I'm sure many of us will say yes. I'm sure most of us will say yes. If I were to ask, do we need liquidity? Then probably some of us would be but just know that liquidity equals money. So what is liquidity? Let's just go to that and then we will look at chart examples. No, I don't need to do this. Types of liquidity. We have a number. Let me just write this. Types of liquidity. Types of liquidity. Types of liquidity. Of liquidity. We have two broad types, then we have two narrower types, but let's just say we have four of them. So we have static, then we have dynamic, and then we have internal, and the last one is external. Okay, external. Okay. External. Yes, external. Um, external liquidity. So I will just begin with this first one and try to show us using let me try to use this brush again. It has failed me before. So remember yesterday's class on structure. This will come in hand. Let me just do this. Okay, this is not working. Let me use this other tool. I think it will be better and it will be more neat. Um, okay, this might actually work. So we had that. This was this point, the one that has the arrow. This was a low. Then price gave us a high. Then it gave us a higher low, as you remember. Then a higher high. Then a higher low. Then a higher high. Okay, that's what we learned yesterday. So allow me to now explain what what now this liquidity is. So from there you'll find that price may do something like this. Okay, before giving us an upward move. So this area this area uh this area, so it's just quite simple. Static liquidity is, static means it's not moving, dynamic means it is flexible. So as we can see here, let me just look for that. Allow me to look for that. This is what is called as liquidity. I'll change the color to that to help us see it a bit better. Um, yeah. So, um, or let me try and show us in another way the same thing. So this, 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 this. That one gives us static liquidity. Okay, I think that will be easier. Then the dynamic. Remember the second one. The dynamic liquidity is more of let's say we have a trend line there. Okay. Okay. Yes, let's say that we have a trend line there. Now, when we have price doing this, doing this, then we have another type of liquidity, which is now called dynamic liquidity. So, as many retail traders that I know, and even when I was starting out, there's something that happens. It's called support and resistance. So what happens is, uh, because price rejected from here, when price is coming back, more people believe that price price will not go past here. So what do they do is they put their money here. Okay. Then when it comes to here, more people put more money. Okay. And then when it comes back again, more people believe that price will hold, like price will not pass this area. So more people put money here. Um, so this money, let me just get rid of this. This money that has been put here, this is what smart money needs for them to decide if they're going to buy or to sell. And the same case happens here. Let me just here put the money here. Then because price rejected from here, more people believe that the price will not reject from there. So more money is, these are 2, these are 4. Then more people put their money here. And then so forth and so on and so forth. So that's just something about liquidity. So we have this one is static, it is at the same level. Then the dynamic, it's like there is a trend, then there is liquidity that's playing. Then now this first one, the one that I began with, this is internal and external. Internal liquidity, if we can remember yesterday's class when we were speaking about ranges. Range is, you can check yesterday's class in case you didn't manage to watch, and it will help you to be on the same boat with us. So something to note, internal liquidity is normally inside the range. This is the top range. Let me just mark that out. Uh, okay, I'll just do that later. But this is the top range and this is the down range. So liquidity that's between this range is called it internal, and now there's liquidity because you see like here, when people are placing their orders, that is what liquidity is, because there is stop loss. There are stop loss over here. So even when price was buying and then price is coming back, there is some liquidity that's here that is enabling price to move down, because we say that money is needed for the market to move and for price to move. So now we have external liquidity that sits outside the range. We have external liquidity that is outside. So because there was a buy upward, then outside the range there is external liquidity, and also inside the range there is internal liquidity. So 3 aspects that also come up. I know this is a lot, but there are 3 aspects of liquidity. There is liquidity that we want smart money to capture. Then to give us a trade idea, to help us know that probably the market is about to buy or the market is about to sell. That's the first aspect. Then second one is there is liquidity that smart money captures on their way to activate our trade. Okay, I'll just explain that in a minute. And then lastly, um, there is liquidity that we do not expect smart money to capture. I know. We'll get through this slowly but surely. So allow me to just show you something on dynamic liquidity now in this setting. Just here. So we'll just use the same bullish market. Price gave us that. Then when price was coming, it gave us that. It gave us this. It gave us that. It gave us a higher low, then a higher high, then a higher low. Then it came back there before giving us an up move. So as you can see, the kind of let me just use this tool. The kind of, you see this one here, it's the same as this one to some extent, right? This one, it's not picture perfect, but this liquidity is not static. This is static, this is dynamic, and also this is internal liquidity because we have just a minute. We have the range over here is our top range. Then this one, this is the range. So price was just in between the top range and the down range. So that is on liquidity, internal and external. And I don't think there's anything else that I am leaving out. So just to say that in a bullish market, liquidity that's sitting at the down range, we do not expect for smart money to capture it. I will explain. Um, you see, when, for example, here, when the market is buying, we don't expect for price to come and break this structure when the market is buying. It happens at times, but that's the expectation. So that's why we will place our stop loss here, because when price gets to your stop loss, the trade will automatically be closed, and then the loss you had accumulated, let's say you were buying from here, then price comes to here, to this point, and this is where your stop loss is. You have, it's a risk management tool where you say that probably I want to lose like $10, or then you use, by using the lot size, then you can know where to put your stop loss. So liquidity sitting, so just by this topic on liquidity, we can know where we want to either take profit or place our stop loss. So so yeah, we will get to know this as we progress. I know probably I am losing a lot of us, but just hold on with me. So I will get rid of these ones. I'm sure we can get them. We can get them. Let me use that to just delete all of that, and then also use this to get rid of that. So back to now liquidity. Now we are building, okay, how smart money works, because we've said these are the people that move the market. So we need to understand. I did come up with this theory, but by mentorship, my amazing mentor, I have been able to know how these institutions work. So just a bit, we will go to institutional candles. So everyone is anticipating that price will go to the upside, right? And they are correct. But now, before smart money buys, they need money to move price, right? So what happens most of the time is, let me just get rid of this, is let me just draw this for us. is they will open an order here. Okay, all right. Let me change this to a dark fill. I don't know if it can be more red. I want it to be a bit. So they'll open an order here. Let me just get rid of this one. And capture all this money. You see this money that we have been placing here and hoping the price will buy. Then they will open another order. They've already captured all of this money. They will open another order here to the upside, and I will put this as, I'll just use this, the same coloring. I'll put this to show that now they bought. Let me use blue. That blue is okay, and also a darker color of blue to show. So before smart money buys, okay, everyone was right. The price was going up, but now the price went up because of the stop loss. The traders were stopped out. The traders were closed out of the trade and their money was lost because smart money needed their money to push the price up. So yeah, that's what happened. So you find that your analysis was okay and you are really looking forward to making good money, but yeah, you did not make the money you are anticipating. I'll just show us this in a chart example, then we'll proceed. This is an asset that I enjoy trading. So you'll find that there's a lot of liquidity that was sitting all the way from here. This one, all this is liquidity, right? So everyone was putting their money here, waiting for price to go up. And they were right, price went up. But before the price went up, okay, before the price gave us this amazing uptrend, there was this bad boy. There was this, let me just use another color. There was this candle. There was that candle. Let me get, okay, it makes sense. It makes sense now. Guys, it makes sense. What I'm showing, what I was drawing. So before there was all this liquidity that was captured by smart money, and a lot of traders were anticipating that this will hold. You see, price came here, it rejected. Price came here, it rejected. So the anticipation was price will come here and reject and go to the upside. But this big sell candle. So every time before smart money buys, they first sell to be able to capture liquidity, our money, your money, the money that you've really worked hard for and you funded your account. So they'll they'll capture they will capture that before they buy. So we need to wait and see all of this play out, okay, before we take a trade. Trading is a game of patience. It's an activity or a career that requires a lot of patience. So we need to see all this happen. Now we will start adding the few things that we studied yesterday. So the first thing is this is our top range, okay, and then this is our down range, all right, but also the trend. You remember yesterday the structure from here, the market has been selling, all right. We covered why this was not a valid structure, but price gave us this. So it was a high, a low, lower high, lower low, lower high, lower low, lower high, then price gave us a lower low, right? Then it gave us a lower high. Then, if we can remember yesterday, we mentioned something about break of structure. What break of structure is, it is a shift of structure to the upside. So before we take any trade, we need to see a few things. We need to see liquidity being captured, this one over here. Then we need to see a break of structure to the upside. All right. We don't just trade because we feel like trading, but we need to see this happen. We need to see this. So the checklist is structure. Structure was selling, the price was going down. Then that is now this aspect. Then price broke structure to the upside, meaning that we are anticipating for price from this point, right? Price to give us this, to give us another lower low. But in our case, price did not give us a new low. It broke this lower high. Okay, so those are the things we look at. So now I will combine, as I had written here. Where is that? I had as I had written here, I will combine institution candle and mitigation theory. So smart money do not trade as we do. They do not use stop loss as we do. So when they open this order, uh, when you want to buy or to sell, it's called placing an order. So when they they sold down, okay, price reached here, they had enough money. So what they did is they 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 opened a buy from here. So remember, there's this order that was opened, the sell order, right? That came down. Then at this point, they open a buy order. So as the buy order is, so this buy order is increasing in profit. Guys, what is happening to this sell order? What is happening to this order? What is happening to this one? Guys, as price is going up, what is happening to this sell order? So they sold, it went in profit. But as now this one is going up, what is happening? What is happening? Anyone? 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 Guys?
Stop liquidity.
You say?
Sell stop sorry.
No, okay, let me try and explain again. So we smart money opened a sell at this point, okay? This red candle. So as the sell was going down, they were in profit. But now they opened a buy after they captured this liquidity. So what is happening to this profit that we have? I don't know if I'm making sense now. As price is now coming up, is the profit reducing or increasing? Yes. uh,
I think the profit is increasing as the price is going up.
okay, the price. Okay, anyone else?
The price is reducing
Okay,
because now they opened a sell.
okay,
That big candle that went down to capture that liquidity. And then they opened a buy now. So those who are holding a sell, their profits is reducing.
okay, thank you. Who, let me just check who was answering. Okay, thanks for that. Where are you
Mm.
joining us from, if I may ask?
Pins,
Fins.
pins from, yeah, South Africa.
Okay, karibu sana from South Africa. We are honored to have you on the call. So as Fins has said, um the profit in this, let me just show us, as this is going up, the profit in this blue candle, because it's a buy, when you buy and price goes up, you're in profit. But when you sell, and also when you sell and price goes down, you are in profit. But now as the buy, this candle is going up, this one is reducing in profit. Let me just show us that this one is reducing in profit. So it was probably $100, then it 20. When it's at this point, at that point, then it is break even. You are at zero because the loss here and the profit here is equal. Okay, so they will continue buying upwards to this point, but they don't close their trades. If I was the one trading this and I have my account of $1,000 or $100 or whatever amount, by the point that this one reaches here and I had this open opened order as a sell, my money will be gone. All of my money will be gone. But as you have seen, they have a lot of money. They have 700 billion US dollars in their account, so they can withstand the drawdown, the negative loss, without having a stop loss. So now I want to combine with mitigation. So mitigation means reducing the loss that they have. Okay, so what they'll do is they will open another sell. If you don't know these things, you will suffer in the market, and you will say that the your broker is manipulating the market, but the broker doesn't manipulate the market. It's the smart money who run this thing. Um, so let me change this to red. Just allow me to do that. Okay, so they will close this order. Okay, guys. Okay, they might close all of it or they may not. So this order, they have already money in the bag. Okay, then they'll open another sell to come and mitigate, reduce this. You see this as price was going up, this sell was in, it was red, it was in drawdown. They had negatives. Okay, so what they do, they'll come and try and reduce this loss. If they are not greedy, they can close it at the open of the candle and close with zero. But at times they want a bit more and they close it at 50% or more. So you'll find that they'll come here. Okay, close this one with some profit and also close this one with some profit. Then the trend will continue. Then they will buy to the upside. Okay, kindly, if I lost you, type a 22 in the comment section. If you're still with you, type a 11. Hello guys, hello guys. um, just a minute. I think this will do. Just give me a minute, guys. Sorry about that. I believe I'm back. Hello,
He's typing in the group that he's joining. Hello?
can you hear me? Hello, 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 guys. Sorry about that. Let me share. Let me share in
Yes,
just a
we can
minute.
hear.
Hello, we're still there.
Hello, we can hear you.
Okay, let me share my screen again. Uh, I will have a physical trading space so that we won't have these issues in the future. Okay, are we together? Is the screen visible?
Yes.
All right.
Yeah, we can see the screen.
So, guys, I'm not teaching things that don't happen in the market. Let's just take a look at this place, okay? So there was this liquidity that was sitting here. The first check, okay, tick. Then there was this candle, okay, that captured the liquidity. Then, just a little bit, let me add this here. Then there was a break of structure, okay? We had a break of structure to the upside. So what happens to this one? As price is buying, this one is in drawdown, okay? Are we together? This order that was opened here, that captured this liquidity, the same as this one, is in drawdown. So, smart money bought, then came down to mitigate, okay, this week. You see this area. Let me just highlight this for us. You see that area. Let me just delete that. So price came down to mitigate this. Then they opened another order to the upside. Um, we are okay up to there, I believe. So every time before you take a trade, you can even go for a week without taking a trade, but your capital will be preserved. It's not about the number of trades you take, but taking quality trade. So as a smart money trader, and that's what I am showing us, if you can't beat them, join them. If you're buying here, these guys will take your money. If you're buying here without waiting for all this, they will take your money. It's better for you not to take a trade, but to preserve your capital more than just trading recklessly or so. Yeah, so that's now I have joined the two, mitigation block and mitigation block and institutional candles. So allow me to check another, probably Bitcoin. Okay.
Can I ask, please?
Okay.
Can I ask?
Okay.
Yeah, on that chart that you are showing,
Okay.
then where is the good entry? When can a person take an entry and perhaps make small money there?
Okay.
Because
I'll be
you've
sure.
highlighted that if you enter here, then
Okay.
okay.
Okay. So now before we take a trade, we wait for all this to happen. Let me just show that fits. Wait for all this to happen. Okay. And for price to come back to this area. I'll highlight this as green to show us what we need to wait for before we take the trade. Okay. So we need all this. You see, there was liquidity that was captured. Then price, okay, there was liquidity that was created. Then smart money captured the liquidity, opened a buy order to the upside, then came back to mitigate. So when smart money is now coming back to mitigate, that is where now we are looking to take a buy. You remember, the market has changed from selling, which is bearish, to now bullish. Okay, but now our entry, we need the confirmations for us to minimize. It will not happen every time, but for us to minimize our losses and our rate of. So yes, as you've asked, now when price is coming back, we will be looking. I think tomorrow I will be showing us now the things we need to look for at lower time frame. Okay, this analysis we're doing it on a daily time frame. So each candle here, this candle is a whole day, took a whole day to print. This one took a whole day to print. So time frames, you find that, let me show us something. You see this last candle, let me just highlight it and show us something, then I'll go back to the class. So on higher time frame, we look for now this one, as I had shared in our class yesterday. Let me just look for that. What was it called? Forex PowerPoint. Forex bootcamp. PowerPoint. I had shared this yesterday for those who were able to join the class. Let me just show us again on where we have reached as of now. Okay, according to how the poster had been printed. Just a minute. It's taking a bit of time. So is my screen visible? So yesterday we did this forex basics, then we went to introduction to market structure. So today we are covering liquidity. We've just covered this, and now we are at higher time frame point of interest. So this is just an area where we are expecting for price is coming down. Let me just go back, right? Price is coming down, right? So we are anticipating that from now, this area, price is going to go up. So I will show us the entries and even a few trades that I've managed to take this year, and yeah, we will share in my happiness, and then you will begin to share in your own happiness. All right, is that together? Let me just show you this. When we go to a lower time frame, this is 24 hours. Let's go to 30 minutes. This highlighted candle, okay? I just want us to see something. This is from here. Or was it from here? From here. This was 25th, as you can see at the bottom of the screen. 25th of August. At what time? At that time. And okay. Anyway, so from 25th of August, okay, to 25th of August at around, what time was this? At around, let's say 8 p.m. and it ended on 26th of August. It's not yet 8 p.m. Okay, we are 2 hours behind, so that's why. So this single candle, um, on the higher time frame, now we'll go and look for entries on this is one candle, but as you've seen, on a lower time frame.
yazi ngivula lapho nobabili athi ngibenilele nganibingelele
Okay,
athi
Fields,
hayi angenzi
kindly
ukudla
mute for us. Then you can unmute when you're probably asking a question. So yes, so we will look at now lower time frame entries. We can take our trades from from higher time frame entries. We can take our trade from daily. We take our trades from 1 hour going down, depending. But we use higher time frame. For example, all of these ones, we can use them to do analysis and look for higher time frame point of interest. This one, okay? Then so that's just like one of the check. We are not yet done with this. So I hope I have answered the question. Then I can progress. We are together. Hello?
Hello? We are together.
Okay, thank you, thank you.
Okay, thank you, thank you.
So this is Bitcoin US dollar.
So this is Bitcoin US dollar.
We're going. I'm
We're
just
going there.
showing us
I'm just showing us
what might happen and all
what
that.
might happen and all that.
Okay. So
So
let's just mark our chart again.
let's just mark
Okay.
our chart again. Okay.
So just from the recent one,
So
this
just from the
was the
recent one,
previous
this
range,
was the previous range,
our down range. Okay.
our down range.
And
Okay.
then this was our top range.
And then this was our top range.
Something else to notice, there was
Something else to
liquidity
notice,
that was
there
captured
was
here.
liquidity that was
This
captured here.
it won't come
This
just once. You
it
have to
won't
stay
come
with the
just once.
charts.
You have to stay with the chart.
And
And
yeah, stay with the charts. Stay with
yeah,
the
stay with
charts.
the chart.
Then
Stay
you'll
with the
begin
chart.
seeing these
Then
things
you
play
begin
out.
seeing
Okay.
these things
So
play
let's
out.
put
Okay. So let's
Fins, could you kindly mute? Because there's an echo. Thank you.
so we'll put some few dollars here. Okay. For it to look a bit nice. Okay. So there was money that was here. What kind of liquidity is this, guys? Anyone can unmute and tell us. So there's internal and external, and then there's dynamic and static. So let me just show us. This is the range that you are looking for. Okay. Anyone? Which liquidity do we have over here?
A
Anyone?
static liquidity.
Okay. Thanks for that. Let me check who answered. Kate. Okay. Anyone else with a different comment on the same? What kind of liquidity do we have here? Anyone?
Dynamic.
Okay, so far. So who has answered that?
Me.
Oh, okay. Thanks, Wanjiko. So this is dynamic and it is internal. So let's just our checkpoints. You remember our checkpoints? These ones. Uh, remember our checkpoints. This is our animation. the candles we created. So there was liquidity, then it was captured. The first thing, there was liquidity, right? Then smart money captured. Okay, and then price was going on a downtrend. Let me just mark this up. So there are two trading views that we can use. Let me just say that there's one that we can just analyze currencies. Then there is the video that I shared on derive. We used to we just use this to do our analysis, the trading view. You can use it even on your mobile. I can share on how to do that on mobile. It's a bit cumbersome, but when I was beginning, I didn't have a laptop. So yeah, I began with my phone and then I grew using your phone as an asset and not a liability. Sorry, Ignatius. Somebody can comment that on the group and wish him the best of luck. So, um, network he's dropped because of network. So let's just mark again. Okay, price give us a high, then it gave us a low, then it gave us a high, then it gave us a low, then it gave us a high, then price gave us a low. We are together up to there, I hope. Then what happened next? Price broke structure. Guys, price broke structure. Price broke structure. Where is the arrow thing? This is a bit different. Uh, Let me look for it. If you see it, you tell me. Okay, that no, not that arrow. This arrow. Okay, it's actually there. So, there's a bit more of some structure. Let me add that to the same. Let me add this to the same. So price gave us this, then it gave us this, okay? Then price gave us this, then it gave us this, then now it gave us this one. But price broke structure. The arrow is actually here. Price broke structure here, okay? Are we together? So there's nothing we are doing this whole time. This is a long time. I believe this is daily, okay? So for since 15th June, when did the price break structure? Price broke structure on 20th of June. We have not done anything to the markets, okay? Are we together up to there? So we are waiting for this to play out. So we have this in check. Liquidity was captured by this candle. There was liquidity that was created, then liquidity was captured, then price went up. Price went up, okay? And then smart money came down to mitigate this order that they opened to capture this liquidity, okay? Are we together up to there? Now we are waiting for smart money to buy. So now this is where we can now be looking to take our trade. Let me add this to, where is this thing? Where is the, let me add this there so that I can get it easily. So what we are expecting is from now this region for us to look for buy, to answer the question that was asked by Feeds. Yes, so this is, we will look at now this tomorrow, okay? Are we together up to there? So this is another example. Another one is, it does not always play out because, okay, I'll just confuse us if I just mention that. Let me just pass that for now. But the same thing we could have said happened here, okay? There's this liquidity that was captured by this candle. Then there was this up move. Let me just mark that for us. Here's the brush. Price was selling, okay? Then that, then this one. Then price broke structure, okay? It doesn't have to go so high, but it broke structure. Then it came back and mitigated. Then it continued up. So that's just one example. Let me look at another, just the last one. Then we can look at currencies, I think. All. And then I'll need to clear this. Let me look at Euro USD, Euro US dollar, Euro USD. Okay. Then we can progress. I'm seeing time is going, and I still have another small subtopic for us to look at. I'll just pause the video, then we can continue for that, so that it won't be too long and you won't get so tired. We're still there, I hope. I didn't lose you, just a little bit. Let me go to a higher time frame. We can change the time frame even to monthly or weekly, depending. Let's use weekly. Okay, I'm not quite seeing anything catchy, but it's an, you see, I've already marked a few things. We'll get to know about the things that you're seeing here, the mitigation block and all that. But let me show something. So, for example, let me just hide. I think you can hide this. Hide. Hide that so that we can. It's something that I've been waiting for a while, and it's just at the verge of playing out. So let us hide that also. So you can mark up your chart to make it look better as you want. So okay. So let us see from here. Okay. Where did I take this one? Okay, guys, as you can see, let's begin. All right. There was liquidity that was captured here. Okay. By this, people are waiting. People are waiting. As you can see, it doesn't have to be a lot of difference, just a little difference. Then price broke structure. I think we're beginning now to get the look. It doesn't depend on then price broke structure. Okay, to the upside. This move. Okay. Then price came. No, what am I doing? No, not there. Which one was this one? Was the one? This was the sell that was opened. It came. It captured. Then they bought all the way up. So let me see this. So higher high, higher low, high. We can either use this or this as our break of structure. It's just to show that structure has shifted to the upside. Okay. So price has came back. For example, in this one. For example, here, price came back and filled. You see, before it went up. So we anticipate that price will come again to this point. Exactly. So that's what happens. Okay. Also, there was liquidity that was captured here again by this candle. Then there was a break of structure to the upside. I hope I'm not thrashing us so much, but there was a break of structure to the upside. Then now price has come. There's liquidity that will be captured here. Okay. There's liquidity that's sitting here. So I am anticipating for price to buy to the upside. But we'll look now on the things. So smart money works with anything that has candle. Even if you are to quantify the price changes of the value of dogs or cats or chicken, and you are to put it in candle, this thing works. Anything with candles. That's the point. Smart money works with anything with candles. And we're not using indicators. We're just using this knowledge. So yeah, allow me to do this.